saving in tax there.
Yes, I think very
Is that
good
possible?
tax planning issue.
Very good.
I mean, I'm not
Just
going
something
to
that's
go in what the
sprung on.
legal implications of having 4 wives in this
Yeah.
country are. But yes, if you're able to get a wife and have 3 other wives as well, and have them in partnership, and you know that makes actually 5 partners.
Right.
Yeah, and just over £6,000 is a personal allowance. You're looking at nearly £30,000 tax.
Oh, so I've underestimated.
Partnership,
yes. So yeah, I mean, by all means, it can
for a business.
for a business, purely for a business
for
point of view.
partners. But then,
Yeah.
for
Can I do it
individual
legally
one
then?
wife or
Yeah.
4, he can or cannot claim for the others, or they claim?
Well, if they are business partners, then they are each
Oh, I
entitled
see.
to the 6,475 personal allowance. Or if they work for you, then yes, if this is their salary, you pay them a salary of say £10,000. Out of that, 6,475 will be tax free. So that option is now. Let me give you even more advice on that. I'm not going to encourage you to have 4 wives straight away.
He hasn't even got 1 wife. So to save, you have to get married so you can save your £6,000.
Sam,
Okay.
I wasn't asking for myself, I was asking for a friend.
You're asking for a friend. Okay.
Yeah, we always ask for a friend. Yeah, but you know, purely from a tax angle, not only this was the income tax, but you know, each one of us, we are also entitled to have a capital gains tax exemption of 10,100. Right. So you see, if you bought a property, for sake of argument, investment property, with your 4 wives and yourself, that's 5. Just working on the assumption.
Right.
Or 4 partners,
Yes.
or 5 partners, and you bought it, say, for 100,000, and you sold it in a year's time, and you sold it for 150,000, there would be no taxes to pay on that either.
Because each individual is allowed.
That's
Very
right.
good.
So that's 10,100
Yes.
per individual, and that's capital gains.
Right.
Yeah. But once you lose it, you lose it.
So if you haven't used it within that
Yeah,
year,
that's right.
you've
You've
lost
it.
it. You can't revert back and say,
That's
oh, I
right.
bought it 10 years ago.
No.
Right.
And it's the same thing with that personal allowance. You can't transfer it to somebody.
Right.
Yeah, I say, well, no, I won't use it. I'll give it to my husband or my wife. No. And you can't carry it forward into the next year. Once you've lost it, you've lost it. So you need to utilize those things within the tax year. But yeah, if you plan it in such a way, so you know, we're talking about tax planning. So tax planning involves not just income, which is income tax, but also other taxes, and we mentioned about this capital gains tax. So if you were you know, running a business in partnership, you could have the 10,100 capital gains. You'll have the personal allowance. You know, when you start adding on other bits and pieces as well, there are other investments which we mentioned.
That's right, yes.
You know, you were looking at
Yes,
the note,
notes.
and it says
ISAs,
ISAs.
yeah.
Yes. Now, there are products, Islamic products now available in the market.
There are, yes.
Yeah. So, which are Sharia compliant products, and that's what we should be encouraging ourselves and our viewers, that whatever we do, we got to make sure that we are complying with Sharia law.
Inshallah, yes.
Yeah. And there's no excuse these days. Whether it's a pension, you can invest pensions which are Sharia compliant, ethically approved products. You can buy investments which are Sharia compliant. Again, you can, you know, not only are you saving tax, and not only are you sort of trying to, you know, increase your wealth, and there's no harm in that, it's quite Islamic to do that, but you're also doing it in a Sharia compliant manner. Yeah. So we should be looking and exploring at all the what you call means available to us.
Even mortgages, as you know now,
Yes,
you
that's
can get Sharia compliant mortgages.
That's right, yes, absolutely.
You know, so you should change everything. Even I'm not sure about insurances as well.
Well, there are. I mean, you see on the television, you see the product where if you want a car insurance, yes, it's halal, Sharia compliant. So we should be, just like we have this Iqra channel.
Yes.
It's an Islamic channel. It's a community-based channel. It's for the benefit of the public, it's for the benefit of our community and the wider community,
And
the host community as well. But we should also see that these products which are now coming onto the market, we should encourage all our viewers, even ourselves, to participate in these things.
Absolutely.
Yes, because it's in our benefit, and the added bonus is that there are tax reliefs available for that.
Now coming on to that, you mentioned ICRA channel. A lot of charity is done, work is done on these channels. So how can people benefit from the charity, both the charity and the individual?
Yes.
And companies?
Yes. First of all, let's look at companies. When
Yes.
company make donations
Yes.
to a charity, UK registered charity, that will be treated as a business expense.
Right.
Yeah? So the company is going to get tax relief on that.
Mm.
When an individual makes a donation to a
Good
UK
cause.
registered charity,
It has to be UK registered.
yes, well,
Of course we're paying UK tax.
we get
well,
paying
of
UK
course it
taxes,
makes
that's
sense.
right. So when you're making that donation, if I was to donate £100 to Al Khair Foundation,
Yes.
who are the owners of ICRA
channel,
TV,
yes,
If I
the
was-
educational arm.
the educational arm, that's right. If I was to make a donation of £100, and I'm a UK taxpayer, I signed the gift aid declaration that I'm a UK taxpayer. Al Khair Foundation is able to claim back from the Inland Revenue basic rate tax relief. So really, that donation of £100 actually becomes £125.
That's well worth
You know?
it.
Without me doing anything about it, Al Khair will claim that from the Inland Revenue
So
tax
they were
authorities.
increased by 25%.
That's right, yes.
Excellent.
And you know, if you are a higher rate taxpayer, that
Yes.
means you are paying tax at 40%, what will happen is you can actually claim that additional 15% from the tax authorities yourself. So, you know, the donation becomes even cheaper for you. It's something like £85, not £100.
Right.
So I think we should, of course, it's our Islamic duty, first of all.
Absolutely.
You know, to help
To
the
give
poor,
zakat
the
and
needy,
poor,
yes,
and yes.
whether it's zakat, whether it is sadaqah,
Yes.
but the government actually encourages it, and this is where tax planning comes in. It tells you, if you do it this way, we will also put in something on your behalf, in the sense, your tax, income tax which you have paid, we'll pay that back to the charity.
So there are benefits of paying tax.
That's right.
So that's a
Yeah.
good thing. If
Now,
they're giving
in order to have that gift aid, you have to be a UK taxpayer.
Right.
If you're not a UK taxpayer, then strictly speaking, that gift aid should not be claimed.
Right.
Because you can't make a declaration. If you're not paid the tax, you can't say I'm a UK taxpayer.
That's right. Yeah.
So this is an efficient way of giving, and I always encourage all my clients that if you want to give money, if you want to send money to any of the good causes, put it through proper recognized charities.
Yes.
You know. And Al Khair Foundation is one of them, and there are others as well. I mean, I don't want to mention Reed Foundation because
No,
I'm
mention
linked
Reed
to it.
Foundation
But
because it's a very
alhamdulillah,
good
yes,
charity.
and that's
Yeah.
one of the charities that I'm involved with, and it's to do with education. It stands for Rural Education and Development.
And as you said, you are going on a trip to help out and monitor and see what's happening.
That's right, yes. We call it the Reed Kashmir Charity Walk.
Okay.
And it's from the 1st of April to the 10th of April. We take the people from here to Kashmir. They can see the work which is done by Reed Foundation for themselves, the schools, meet some of the children. And of course there are other charities as well. I mean, Al Khair recently has been, you've been away
Yes,
to
to Haiti and
for the
Chile,
earthquake.
and
Yeah.
there's one now in Turkey.
Yes.
And not only that, we go anyway, the
Yeah.
water projects in
Yes,
Bangladesh,
that's
in
right.
Pakistan, and Somalia, lots of Al Khair and ICRA, they do a lot of charity work.
So Al Khair is more to do with like humanitarian
Humanitarian
aid,
charity.
and Reed is to do with education.
Yeah, we are exclusively
Education.
focused education-based.
Oh, it's very similar to Muslim Care. Muslim Care is into
Yeah.
education.
Muslim
as
Care, I
well.
met them last week
Yeah.
at a conference.
Yeah.
Very nice.
Yes.
Oh, we had the chairman, yeah.
Munir,
Yes, yes.
Munir Diwan, yeah.
Yes,
Yes, very
yes,
close
yes,
friend of mine.
yeah, that's a good man.
Oh,
Lovely
yes,
man.
yes.
Alhamdulillah, mashallah, yes, I know him as well.
Yeah, I want to ask you a question actually because I'm involved with another channel as well, and I'm setting them up in the UK. And what I've done, I've actually registered them as a private company.
Right.
But really, they're a channel, but purely for education. They're not for profit makers. They're a non-profit organization.
Yes, yes.
So they're not doing anything. They don't even have any advertising at all on the television.
Yeah.
So it's all like through donations.
Yeah, yeah.
So should I have basically register them as a charity instead of a private company?
Yeah, that's right, because, you know, the purpose of charity is not for profit. That's the objective, right? It is for public benefit.
Yes.
So